Hi, everyone. Thanks for coming to the last class of MS&E447, Blockchain Entrepreneurship and Technologies. And this is our last class for the quarter. And today we are honored to have an exceptional panel with Dan Boneh, Daniel Marin, Groth, and Ravi Mhatre. The floor is theirs. I will pass the mic to Dan Boneh for intro. Yeah.
Awesome, thank you. Okay, so. All right, so first of all, I should say you guys should feel blessed. It's really quite amazing to see so many students on the last week of the quarter where everybody's busy with their last project. So thank you all for coming. I hope it'll be a really instructive and productive hour for you. So we have a fantastic panel. Maybe I'll let the panelists kind of say who they are, and as you say who you are, I'll ask like my first generic question, which is maybe you, in a few sentences, you can say how you got into the blockchain space to begin with. So Ravi, why don't we start with you?
Yeah, nice to see all of you. Ravi Mhatre. A long time ago, I actually was a student at Stanford. I was an electrical engineering major, but that was only because CS wasn't in the engineering department yet. But I've been a technology, mostly in kind of core, an investor, a venture capitalist for 30 years now, and mostly the firm I started, Lightspeed, my focus and a lot of the firm's focus is in core, we call it enterprise, but it's anything where there's a deeper kind of core technology that underlies the product that is being built. And I'm trying to think, how did I get into blockchain? It's just, in the beginning, I think we made our first investment in 2013, but it was just one of those things where it's kind of all of you, really a lot of new ideas. It's really younger generations of people, every time they keep kind of seeing and being excited about the future before the technology is really mature enough to make it into kind of real business. And I think, we probably talked to kids here at Stanford, students here at Stanford, sorry. It's a little like, what's this thing? But again, if you look at kind of Lightspeed as a firm, what we do, what I've done a lot of, it was really once, understood that the kind of core underlying thing about crypto and Bitcoin, it is actually a giant distributed compute sort of system platform. And, as we started to kind of look into it architecturally, it was just a realization that blockchains represented a fundamental and important architectural shift that we're going to enable new kind of application computing problems to be solved at internet scale in a way that kind of democratized and made accessible certain kinds of primitives on top of, I'll just say, sort of a kind of a planet scale network that weren't ever accessible before. And, Bitcoin and, what we talked about is digital money, here we are, fast forward, it's, I guess, 10 years later. I think some of those are really, the tip of the iceberg things. But we got started because we thought, hey, if you really think about Bitcoin as a digital version of gold or money, that was enough of a broad killer use case application that we thought it could pull the platform in. And our view was the platform was fundamentally transformational and a lot of other things would happen over time. And here we are 10 years later. I think things are starting to happen. It's probably taken a little longer than maybe we all thought in the beginning, but that's sort of how I ended up in it.
Perfect, yeah. Jens, you want to go next?
Sure, yeah. So I'm Jens, I'm the chief scientist at Nexus. I've been an academic for many years. I've been in cryptography for more than 2 decades. I invented a lot of zero knowledge proofs. That was sort of like my passion, where my heart was. I always had the intuition that delivering not only, delivering verifiability to the world would be really important at some point. I didn't actually have the application in mind, right? It was more like the intuition that this would be really important. And I'm super happy that blockchain came along and really made it into a reality. And I've seen a lot of adoption of the schemes I've developed, the schemes others have developed in this area. So that's been exciting to see. It's also a very unusual path for an academic, right? I just wrote papers and, left it to the world to do something about it, right? And it actually got picked up. And typically as an academic, you have to put a lot of effort into and go out to companies and convince them that they should use your scheme, it's superior and so forth. And I've really done nothing of the sort, right? I've just put things out in the open and then it's been picked up. So that's sort of interesting. And yeah, I got into blockchain on a personal level in 2019. So until then, I've really I looked a little at Bitcoin and so forth. That's probably a fad, right? And it turned out not to be. So, but sort of like, 2019, I sort of like got the chance to go out, and it was sort of like time for me to explore something new. So I joined Definity. I worked there for a while, and then recently I joined Nexus. So that's my path into the blockchain space.
Great. Yeah, it's a good story. And Daniel, you want to go next?
Yes. Hello. I'm Daniel, founder and CEO of Nexus. How I got into the blockchain space? Well, I was part of the Stanford Blockchain Club. And that's how I got into it. And I see a few friends over here. Just as Ravi, I was also a student here. I actually graduated last summer. And I think I got into the blockchain because of cryptography in the first place. I took CS 255 and CS 355, also CS 251, right? And I guess the class was just really fun. I'll just be honest. It was just that simple. It was just really fun. The homework, I remember them, like if it was yesterday. It was challenging, but it was very practical. And not only that, but the idea that one could program programs that allow you to program people through economic incentives and to get people to work together and cooperate is a really powerful property of blockchain systems. And that is just like really attractive. With that, I would say that the company that Jens and I are working on, it's more about computation in general, but just because it has so many applications to the blockchain space, that's why we're here. And yeah, that's pretty much it.
I'd like to still claim the company came out of your senior thesis, which is great.
Oh,
which is good story.
Yes. I should give credit totally. So the company started out of my senior thesis here at Stanford that I worked with Dan. So Dan was my advisor not very long ago. And now it's a full-blown company.
See, so you can choose great senior thesis topics and they become successful companies. So actually, let me start with you, Ravi, to kick this off. So I guess the question I wanted to ask is, all of our students have a lot of opportunities, a lot of areas they can go into. Many of them go into machine learning. There's a lot of pressure to go into machine learning these days. But I hope many of you guys are going to go into blockchains. So could you help maybe the students kind of decide which area do you think is more exciting? Which area do you want to invest more in? Machine learning, blockchains, maybe a third area?
Yeah, well, look, if you, machine learning and AI, I mean, it's...
Don't say both, though.
No, I would say it's like, I'm trying to remember the exact year. This was before the last crypto downturn when it was really in the up market. I think going into AI right now would be like going into crypto then. Now, maybe the cycles in, kind of AI aren't going to be as big, but there will be kind of a boom bust cycle. And we're in, kind of the honeymoon first, period of hype and optimism, and we'll hit some kind of a trough of disillusionment. So if you really love it, go into it. But how would I answer that? Because I was thinking about maybe not this question, but why am I here? We're chasing a lot of things in AI at Lightspeed. Why am I here? Let me put it this way. The blockchains, and particularly this idea of blockchains now with verifiable computing, what is that? And I was trying to think about what's the analogy. And when I, first got out of Stanford and got into VC, this was when I first got into VC in the mid-90s, the thing that was happening, I don't know where all of you were in your life cycles or maybe being gestated at the time, but it was basically the internet as the first time you had a protocol that would allow over time billions of people. At first it was millions and then tens and hundreds of millions of people. But today it is the same protocol that for a communication network allows billions of people to be interconnected. And, it was pretty profound. It was TCP/IP. There were, it was a lot of layers that self-described in the network how communication should happen at scale without you having to know anything. You'd put a packet in here, and that packet it could have to go through, 15 different stops, and each stop didn't know the whole of the network, but it knew enough. It was like self-describing in the protocol how to take a packet and move it the next way. And amazingly, you fan this out, and the same protocol today, it allows, it's an incredible like digital delivery system, and you can set guarantees now where for how reliable the delivery has to be, or unreliable, depending on what kind of media you're trying to move. But from the beginning, that was massively transformational. Literally before that, every communication network, you had to know the address of the person you were sending to it and the specific route. And if you can imagine, I mean, if every time you're going to send something digitally, you had to know everything about how the bits were basically going to go across some scheme to get there, it would be impossible to have the dream of just making that scale and be organic, and no matter where you are in the world, you could pick it up and just plug into the fabric. So why am I here today as it relates to blockchain? There's a couple of things that have happened recently, and we've invested before, because I feel like we have sensed that the platform, distributed ledgers, there's a lot still that needs to be done to make them scalable, reliable, accessible, so that billions of people can be on them. But a couple of fundamental things have changed. One is actually the important work that Dan and Jens and others have done around, it's zero knowledge proofs, but it's basically the cryptography to in some way not have, again, what I call networks before the internet, which is point-to-point ways that if I really want to know who you are, and cryptographically or mathematically in the network, I can guarantee that. All the kind of previous mathematical systems, they really only worked in more of a one-to-one way. And that's great for, we've seen a lot of what that could do. But with, the new kind of mathematics and cryptography, this idea that simultaneously everything happening, and if this is in the network, we can know that it happened the way it should happen. That's a massive unlock. And why is that? Because it means, if you think about the internet with TCP/IP, that really created a scalable, both kind of language and kind of set of underlying communication infra to let the network be scalable to billions of people. Now you have, I guess it's really data and compute. What needs to happen? If people talk about the network as the computer, you want to make those things part of the network. What you need to do is, one, have a set of primitives, just like TCP/IP self-described the primitives for communication. You have some of it with XML, and there have been, other things for self-describing data, but with things like Solidity and, EVMs and these things within crypto are the first time we have, like TCP, it is a standard set of primitives it's essentially how compute should happen in an abstracted way, where it doesn't, if you try to get compute cycles from Amazon, it really has to come wrapped in, basically a virtual machine that you get from Amazon. There's a lot of specific things to what you're getting. It's not like electricity, where you plug it into the wall, you have no idea where it came from, and it is all truly the same. Things like Solidity, EVMs, and what's happening now are exposing primitives such that compute and data can truly be, you won't know where it came from in the network. It will all be truly the same. And that's what you need if you're going to have true cloud computing. So you need that, and then you need the mathematics of cryptography that it's kind of multi-point-to-point validation of anything happening in the network happen. Those two things are actually quite recent in terms of, I'd say, it's just even like the innovation to kind of understand that they were possible. And if you really roll the implication forward of those two things, it is pretty profound, because I think, again, relative to everything we see happening, I don't know if you want to call it Web 2 or the way the internet and the cloud and, web applications work today, with distributed ledgers and blockchains, there's a lot of work to do to make this industrial grade so it can actually work in the way it needs to work and it doesn't fall over. And if you guys weren't around in the 90s, but in the 90s, it was the same with the internet. Everybody understood the potential of what it could do. And it took 15, 20 years to mature the infrastructure. I don't think it'll take this long that time, but that's why I think blockchains and crypto, what they're going to enable is the network to truly be the computer where, and again, a lot of the things we see, you want AI, well, guess what? You want to have an agent that can go off and at some level it understands the protocol for what it should do in the network and how it should be interacting with other programs in the network, and the data is kind of there. And all of those things you can trust that they're not corrupted. really what, today our blockchains, that is going to be the substrate upon which these things run.
So Ravi, I'm going to interrupt you for just a second. I'm not going to let you off the hook that easily, though.
Yeah.
So still, I want you to answer the question. So imagine you're 22 years old. You just graduated from Stanford. You have job offers from a machine learning company. You have job offers from a blockchain company. How do you choose where to go?
I'm going to say, well, look, you have to decide what's important to you. If you want to be where if you want to chase the momentum, and I'm not judging, you should go do AI. If you want to really be, again, from what I believe, 30 years of technology investing, having seen what happened with the internet as a massive platform shift, and then having seen what happened with cloud computing and mobile smartphones as major platform shifts, have had huge implications on our lives. If you want to be involved with a core I guess I'd say reference architecture technology that has the potential to be, a fundamental platform shift, and you want to be in at the stage where it's really about building and, being there before it's in the hype cycle. I definitely think, blockchains and everything around, crypto is the wrong word. It is the cryptography. It is the fact that we now have technologies that are exposing in a standardized way computing and data primitives in the network. That is it's going to be a hype cycle. I can't tell you exactly when, but people are going to wake up in some number of years as soon as this technology is really at a maturity point where it doesn't break when you try to put 1 billion people on it. And also, the other thing happening right now, and it's being driven by AI, but is the cost of GPU compute cycles is coming down so drastically. This was never possible before because even if the math worked, it was too computationally expensive to do it. So anyway, there are a lot of confluenting factors such that if you want to do something that really is the platform of the future, I definitely think, again, blockchains, cryptography, distributed ledgers, these are going to drive the applications of the future. And I don't know. It just depends what you want. For me as a VC, that's always exciting. It's sort of where the puck is going. It's not where the puck is. And again, I'm not judging. I think you can get a really good job that pays well if you take the AI classes and want to have a job in AI. I just think the chance of working on interesting problems that really are going to have the profoundness of affecting it's just the future of how we all engage with compute and machines. And frankly, the substrate on which, I think real AI, the AI of the future where, you have AI and it's acting on your behalf with other things out in the world. The substrate for all of that is definitely going to be some form of these ledgers that embody, many-to-many cryptography. They embody the idea that, hey, things are happening on your behalf, but you take for granted, just like, a dollar is a dollar, no matter where you use it in the world. You have full trust that whatever happened in the network is what needed to happen. All of those things are going to be based on blockchain technology. So,
okay, great. Perfect. So I think you're saying really maybe the opportunity for impact maybe is greater in the world of blockchain. Yeah, maybe part of it might be also because it's a smaller community than the AI community, which is now huge and attracts a lot of people. And that's how
all these things start. And if you look at AI before, the ChatGPT moment, it's a pretty small community. It just isn't that anymore. Everybody's on the bandwagon. Now, again, I'm not judging. I'm not telling you that. I'm not saying that's a bad thing to do. You have to know yourself and what matters to you. But yes, I'm probably more like what you're describing, a person.
Both options are valid options. It's just a question of how do you decide. So this is great. So Jens, let's move to you. Thank you, Ravi. This is a great answer. So let's move to you, Jens. So let's see. So you've been working on zero knowledge now for quite a long time, 2 decades, as you say. You've done amazing work in the zero knowledge space. I hope you guys know that Jens is actually the father of many of the techniques in zero knowledge that are used in the blockchain space today. In some sense, it's kind of interesting. The reason zero knowledge, or I should say succinct proofs, are useful in the blockchain space is because a blockchain is a slow computer. It's a slow and expensive computer. So rather than have the slow and expensive computer compute something, it's better to compute it elsewhere and then prove to this slow and expensive computer that the computation was done correctly. So this idea is like a 40-year-old idea, but in some sense it took us 40 years until we invented a slow and expensive computer. Yeah? And once we invented a slow and expensive computer, all of a sudden zero knowledge became super duper useful. Yeah, it's really, that's at the heart of it, right? We have very fast computers, and we have a very slow and expensive computer, and the slow and expensive computer has to verify that what the fast computers are doing is correct. So what I wanted to ask you is, this is kind of the reason why there's such a good marriage between zero knowledge and blockchains, and I kind of wanted to kind of have to hear what you have to say about where do you see this field going? Like, what's the future of zero knowledge proofs? Is it going to continue to improve in speed? Where do you see, given everything you've done, where do you see this going?
Okay. So there are a couple of things to unpack here. And I guess one thing perhaps to sort of like add to what you said, I sort of like agree. It's sort of like, I never thought about like, it's really a slow computer that is making all this very valuable. But I think there's also something different about zero knowledge proofs and particular verifiability, right? So the cool thing about zero knowledge proofs is that they can be publicly verifiable, right? And it can be a short piece, just a short proof, right? Regardless of how big and complex a thing it is that you're proving, right? And the cool thing about that is, okay, so it's expensive to compute, right? It costs a lot to prove it. We're paying big time for it. But once you have it, you can just send it to somebody else and they don't have to pay anything for it, right? And that's why it's useful in the blockchain space. But it also enables some really cool things. You can have like a web of verifiability, right? You can sort of like spread it out. You can say, here's a proof of something, and somebody else can say, here's another proof of something else. And you can combine those and you can do a proof of a proof, right? So you can sort of like have this verifiability that sort of like spreads out and grows, right? And I think that is a big thing, right? So you're paying a lot for the individual proof, but you're actually getting sort of like the first bit of something that can grow into something much bigger, right? And so like what I'm really getting excited about, if I think like of this like on a societal impact kind of level, right? Is like you can actually have like the verified society, right? I would love to have that. Everything you see on the internet comes with a proof, like this is the origin of this data and this is how it's correct, right? And I think even with a slow prover, that's something that you may actually get up and running, right? And this is a chance to sort of like see that process starting, right? So that's all like I think the big picture. So then the other question is, okay, so it's expensive to prove, right? So it's expensive to create these proofs, okay? So what is the cost, like, going to look into the future, right? And it's interesting to compare with Moore's law, right? Which says you will sort of like put 50% more transistors on each chip per year, right? That's what you are expecting, right? Right now, I think we, in zero knowledge proof, we are running at 1,000% per year, right? It's like, we're getting 10x, 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 right? So it's really going to go down.
Oh, wait, this is important. You're saying this provers are speeding up by a factor of 10 every year. So
yeah.
So you just draw the two lines, and pretty soon they're going to be faster than regular processors.
Exactly, right? So
that's a joke. That's not going to happen. That can't happen. There's a proof that can't happen.
That cannot happen, right? And you can sort of like, so it's interesting, right? I mean, so right now the provers are getting much faster at a more rapid speed, right? And I think it's because like computation is just more mature, right? So we're sort of like getting to all sorts of bottlenecks that we're fighting with, and we're not at that stage yet with provers, right? So we're seeing 10x, 10x, 10x over the next years, I think. And then at some point it's going to slow down, right? And the question then becomes, what is the overhead, right? So if you sort of like say, what is native computation? And then what is the cost of like proved computation, right? And what is the ratio between those two, right? And what is that going to be, right? And right now it's like 1 million or something like that, right? And what is going to be in the future? And, I don't see any lower bound, right? It's not like, there's no reason to say that it couldn't be like super close. And in general, when you don't have like an obvious reason why something cannot work, then when you put a lot of creative people on it, then eventually you will hit on gold, right? And find ways around it. So, so if I had to make a prediction, I think we can get down to like 1 or 2 orders of magnitude in difference between those.
10 to 100 times provers, that will change the world.
Yeah,
for sure.
I actually think we should put a little bit of more stress in that point, because to make sure that everybody here understands, right? So we're talking about the comparison between verifiable computation and just normal computation, right? How much more expensive is verifiable computation from traditional computation? Because verifiable computation is a different type of computation in and of itself. And the problem that we are trying to solve here is that it's about 1 million times to 1 billion times more expensive. And we actually use a specific name for this coefficient, which is the ratio of the cost from verifiable computation to normal computation. We just call it alpha. And mathematically speaking, the whole goal of our company is to get alpha from 1 million to something like 10 or 30, right? This is an abstract coefficient. And most importantly, I think what's interesting is that we think it can be achieved within the next few months. And there is apparently no theoretical lower bound to its value except, 1.
Actually, I want to make sure did you guys talk about the application of proof systems to blockchains? Or maybe it's worthwhile, maybe I could just do this in a few sentences.
Probably.
So imagine you have like a 10,000 transactions that you want to verify. Today, the way that's done is these 10,000 transactions are posted on the chain, and then literally every single verifier on chain has to go and verify these 10,000 transactions on their own. Yeah? So that's, if you think about it, that's a very inefficient way of verifying a statement, where everybody has to verify the statement over and over and over again on their own, namely the statement being these 10,000 transactions are valid.
Yeah.
It's much nicer if one person could verify the 10,000 transactions and provide a proof, a short proof, like 100 bytes or a kilobyte, that proves that those 10,000 transactions are valid, and then everybody just verifies the proof rather than verifying the 10,000 transactions, yeah? So now these verifiers that are basically running the blockchain, they just verify a succinct proof, which is very fast and easy to do, instead of verifying transactions on their own. Okay, so that's the whole idea why these proof systems are so useful in the area of the blockchain. And as Jens and Daniel were saying, the problem today is that generating the proof for 10,000 transactions is an expensive operation. Yeah, you need to have a lot of GPUs. It's 1 million times more work to generate the proof than it is to verify. But that's okay, because we have GPUs that can do it fast, and that speeds up and reduces the cost of the chain.
Right. Maybe like to do this more dynamic, maybe we can ask everybody here. Who here is familiar with the concept of rollups? Raise your hand. Oh, okay, well.
Everybody?
Okay, well, exactly what we just described is the concept of a ZK rollup, right? You can think abstractly of a ZK rollup as a method to parallelize a blockchain, right? You prove executions on like a stateful machine, right? And the problem is just that it's so expensive to do. And we want to bring that cost down to give blockchain applications much more performance and capabilities altogether.
Yeah, and actually that brings me to the question I was going to ask you, Daniel. So again, we have these large statements that we'd like to prove, 10,000 transactions are valid. It's a lot of compute power for one entity to do it, right? So, in fact, just like today in the world, there are very few companies who can train a billion parameter model. They have to go, so if a small company wants to train a large model, they have to go and contract with somebody else to do it. In the same way here, if you're going to generate a proof for a large number of transactions or for a complicated statement, you're going to have to contract with somebody else to generate the proof for you, because they have the GPUs, they have the compute power, and so on. And so this has a name now. This is called a prover network, yeah, where you actually go out into the world and say, I have a statement, a complicated statement that I want to prove. Hey, Mr. Prover Network, can you please generate this proof for me? And you would pay them for the service. So I was wondering if you could talk a little bit about prover networks, where they come from and how they're going to be used.
Certainly. In fact, maybe I'll take a risk and maybe we can go even one step beyond. Maybe we can all use a demo that we usually ask people to do.
Great.
Okay, so, if you guys, so let me explain first. So the concept that we just described, right, is like, can we outsource the generation of proofs to other people, right? And there exists a lot of idle compute in the world. And so one of the goals of the Nexus project is to see, can we gather a lot of compute power from many different people so that all of them can collaborate and come together to compute proofs which, as mentioned, are really hard to compute, right? So can we collaborate to compute these really large computations? And yeah, let's do it.
Let's do it.
So if you guys go to prove, as in the verb, prove.nexus.xyz. So it's prove, P-R-O-V-E, .nexus.xyz, and click on connect.
Is there a way to throw it up on the screen?
Yeah, I don't know if that can be shown on the screen. Oh yeah, I already see a lot of people, right? So this is sort of like a demo that we like to show everybody. And everybody here is assigned a random ID. And it's prove.nexus.xyz. Oh, yeah, we see like 50 people connected to the network. A lot of them are computing some amount of proofs per second from their device. And the total network has a throughput that is proportional to the total computing power of all of our devices right now, right here together. Yeah, if you scroll down, you'll see all of our devices sort of like connected here.
So you're computing proofs on people's phones.
Exactly.
Excellent.
So yeah, so we're using your CPU power on your phones. And actually I would disconnect because you'll feel your phone getting pretty hot.
I just want to say this is like the biggest throughput I've ever seen. I think it's nice to have such a big class.
Yes, exactly. So our goal is to, so we're parallelizing proof generation across CPUs, right? Currently, the system does not use like GPU compute from mobile devices, but our goal is, can we get this metric of proofs per second to go as high as possible?
Can you say what were we proving in this experiment?
Yeah, in this experiment are random statements, sort of like sample. Yes, and they're all connected to a central server. So it's so this is actually interesting. This is a centralized architecture. Okay, so it's not a decentralized prover network. It's a centralized prover network, but it's massively parallelized. And yeah, you know, I guess we can talk as well as how that might. You know.
But the vision is like in the future, if the New York Times needs to generate a proof that images were generated correctly, they could come to you and say, hey, Nexus, please generate this proof for me. And then they stick that proof into the images that they send to readers, for example.
Exactly. And hopefully by parallelizing and many other optimizations, the generation of this proof is very high throughput, but also very low latency. Not only that, but also very cost efficient, right? This idle compute theoretically is very cheap because no one's actually doing anything with that compute. So our hope is that we can use it to have even more access to even more cheap computing power.
Yeah, I see. Excellent. So in that case, let me ask you, in some cases, all the examples we talked about so far are basically about proving sort of public statements, right? These 1,000 transactions are valid. So suppose you wanted to prove a statement about private data. Like maybe I'm applying for a mortgage and I want to prove to my bank that my balances are such and such. Yeah? So I'm sort of creating a proof now on private data that I don't want to share with the prover network.
Oh.
So how would you help me produce a proof on data that I don't want to share with you?
Well, that's a question for Jens.
Yes.
Yeah, okay. So I guess there are two answers to that. So first of all, CKVM doesn't have to be deployed on a prover network. It can when you need to have like really high capacity. But if you have something which is a small statement you want to prove, then you can just run it on your own machine, right? And then nobody else sees what you're proving things about and everything is secure. So the question is,
but if what it is so I'm applying for a mortgage, the bank is asking me for 10,000 pieces of data about myself. Instead of giving them the data, which is how we work today, I'd like to give them a proof that I satisfy their criteria. Yeah. By the way, my favorite example of this, which maybe you can tell me how you would do, is today, I don't know if you guys have already had to file your taxes. You've had to file your taxes, right? Today, basically, you have to open the kimono and tell the government everything about your income and such. Wouldn't it be cool if you could just provide a zero-knowledge proof to say, here's a proof that given my income, this is how much I owe. but I don't reveal my income. I don't reveal anything else about myself, but the government now can verify that the proof is correct, and now they're assured that I pay the right amount of taxes. But this is called, by the way, zero knowledge taxes. Yeah, it's a kind of a up and coming
ZK taxes.
ZK taxes. Yeah, up and coming area. Would be great if one of you actually wanted to make a project out of that. How do we implement ZK taxes? So that's again an example where I need to generate a fairly complicated proof about data that I don't want to share with the world. So I can't run it locally because the statement is too complicated. The tax code is 10,000 pages. So I would like to use a prover network. And the question is how to do that.
Yeah. And I guess there's sort of like two parts to implement in this from a practical perspective, right? Because the other thing you would want is what I call trust anchors, right? You would have some sort of like ground truth about like, this is your income, and maybe you have a digital signature from your employer that this is what you're paying them. Maybe you need to say how much interest did I get from the bank, right? And again, you'd have a digital signature from the bank that this is how much interest is accrued on your statement and so forth, right? So there's a question of both, where do you collect all that ground truth you want to prove something about, right? And I think this is like one of the beautiful things about blockchain is that now things are actually getting on chain and it has signatures and so forth. So you can actually take that data and you can use it for these kind of things, right? And then you can use a zero knowledge proof to aggregate all that private data and make a claim about that data and prove just the fact that that claim is true without revealing all the confidential data. Now, if that is like a big amount of data, right? And you actually need to go to the prover network and get the prover network to do it, then it's a bit of a tricky question. Okay, so how do you make sure this is secure, right? And the problem is that if you have a prover network, and especially if it's like, you all contributed your cell phone to this computation here, right? So if you have like a lot of people in different places that you don't know who's running that computation to collectively create a proof, right? Then your security is very low. You don't want to just say, here is like confidential data. So the question is how to do that, and there's sort of like a very generic answer that you sort of like use in cryptography called multi-party computation, right? Which means you can sort of like collectively, jointly compute something in a secure way. But that's expensive and it might not be the most appropriate right here. And the reason it's not the most appropriate is because you may be the only person who actually holds all that, right? So it doesn't make sense to have so many parties. So there's sort of like different techniques that are sort of like especially tailored to doing distributed zero knowledge proofs, right? So, and the idea, okay, now I'm getting a little technical.
By the way, they're called collaborative proofs. Yeah.
Yeah.
Oh, so I should say they were invented right here.
Oh, okay. Maybe it's a bit of a misleading question, but anyway, I'm curious to hear.
Yeah, it was. They started like the development of collaborative proofs was started here by Dan and Alex, who was my teacher for CS355, and then there's been further research coming out from Berkeley that essentially they see the goal is how to compute the privacy preserving properties of MPC with the verifiability of ZK. And that's an awesome line of research.
Yeah. So there is a way. There actually are ways to do this, to generate proofs even on private data, which is kind of interesting. Maybe I want to leave some time for questions, but I am curious. There's like one more question that I wanted to ask Ravi. Maybe you have an opinion on this. If you could keep it short, so we have time for questions. In the blockchain space, I guess there is some regulatory pressure from the government on the blockchain industry. I guess one example, I don't know if you guys have been following the news this week, but there's a law, it's called SB 121, that was actually, it passed the House, it passed the Senate, which is kind of unusual these days, and then the president vetoed it. There was a kind of a bill that was supposed to in some sense, help the blockchain industry. How do you see the kind of the regulatory aspects of this industry, and where do you see the relation to the government going?
I mean, to keep it short, I just think if you look at any, kind of new technologies that are disruptive, they always go through these periods. It's the 7 stages of acceptance, or I don't know what it is, but like you get resistance. I think this is normal. I mean, you see this time, the House and the Senate passed this. It was vetoed, but I would just say as it relates to the regulatory framework, it's gone up and down, but the general trend line is we're seeing more and more acceptance because again, it's just back to this technology really does enable something that people need, and it creates kind of a less friction in the way people can engage. And today it's in sort of digitally, kind of authenticated exchanges that are unique. Today it's around money. In the future, it'll be around other things that we believe compute and data. So we believe that the regulatory, kind of things here, there's nothing abnormal, and it's just over time, you are seeing that just crypto is becoming more legitimized.
Mm-hmm. So we just have to wait it out.
Yeah, you can't time these things. You got to do it because you want to be in and be part of the builder community, the small community. And then, when everybody's like, wow, this is really cool and it's happening, you've been there since the beginning. So.
Yeah, makes sense. So this is great. So we have a few minutes for questions. So why don't we open it up? If anybody has any questions, please chime in. Already.
Yeah. So for people that don't know, a TE is a trusted execution environment, right? It provides like a system that provides privacy guarantees for private computation. And so, the question, right, is like why, would we expect like a blockchain use case of some applications if it already exists in TEs that provide privacy preserving guarantees, and maybe that's good enough. And maybe not only that, like TEs have arguably not seen a lot of wide acceptance into.
Take that really quickly because
please.
It's a good question, and some of this you just have to be a student of how technology gets adopted at mass scale. Okay. I'll come back to the internet and TCP/IP. It's not that you couldn't build a network where maybe there's a massive directory and you could send it to. You could find some way to build it, but what happened was the network itself became this thing that was just organically and incrementally scalable, pretty much infinitely. And so all of a sudden, you just had a protocol that allowed for, I'd say, kind of planet scale communication in a way that everybody kind of understood, and the network implicitly kind of described. And I think with blockchains, the thing about trust is it is implicit in the protocol and the design of the network. That has to do with it's permissionless, so we all can get on. And implicit in the protocol of the network, if I transact with you, it is verified. It's not that we create an environment. Today, if you have a trusted environment, it's this distinct separate lift where everybody has to say, okay, I care about trust, I care about verifiability, and I will opt into this thing. The blockchains are more platforms where these come as just sort of a part of the descriptor, and I think that's why it will be different this time. Because if you had a network that just the kind of implicit protocol meant that everything was verifiable at some level, then all of a sudden, it's the creativity now, it's the innovation that's happening. It's like, well, if I can assume that, maybe I would go build, some smart contract or some application that acts on behalf of a person and engages with another person, because I don't have to. It's just the commercialization lift is saying I got to first find an environment that everybody believes in is trust. You don't get adoption. You have to defrictionalize certain first principles things, and I think that's what's different today.
Yeah. Actually, I'm going to answer this very, very succinctly.
Oh, that's exactly what I planned to say.
Okay, go for it.
Verifiability and blockchain are different things. You can use ZK without blockchain. And in fact, our ZKVM exactly allows you to do that, to be able to produce proofs outside the context of any blockchain, right? This is totally different. Like the main use case of zero knowledge proofs today is in the blockchain, but you can do it outside the blockchain. So there's no reason to use like a blockchain when you can just use cryptography. I'll say that.
Okay, this is great. My succinct answer is complementary, which is fantastic, so we can build on each other.
Excellent.
So the last thing you want for verifying the world economy is a trusted execution environment. A trusted execution environment, we know it can be broken with enough effort. And if all of our economies depended on the trusted execution environment for securing our financial system, you're literally setting up a bug bounty to break it, because if you break it, you can make money. So the last thing you want is to have verifiability of the financial system depend on hardware assumptions. You want verifiability of the financial system to depend on math. And that's exactly what ZK proofs give you. Is that a succinct answer to the question? Actually, the answer to that is
Practicality, hardware versus software.
well, it took a while. It's going to take a while, like Ravi was saying. It is taking a while for ZK technology to become mature enough so that CNN can use it. We're not there yet, but we're getting there. Yeah, it's in some sense you can think of blockchains as like the Apollo program, right? In the Apollo program, they were building a rocket to go to the moon, but along the way they invented microwaves, they invented Velcro. They invented Tang, right? They invented all these other things that they needed to go to the moon that benefited the economy overall. And the same thing is happening here. Blockchains, the goal is to build a blockchain. Along the way, we're inventing all these technologies that are going to help humanity overall. ZK proofs is just one example of that. They're being developed and driven by blockchains, but they're going to have applications to media like CNN. They're going to have application to voting. They're going to have applications all over the place. You just have to let the technology mature.
I mean, what we believe, because I think it's sort of, again, ZK proofs, being able to prove many things at whatever level you want. But it is that in common. Blockchains, particularly with Solidity and EVMs, it is the first time, again, at kind of more of a popular, I don't know, broad-based bottoms-up way, people are agreeing on a standard for how they want to factor kind of units of compute and data. Something what Jens said earlier, if you're going to file your taxes, somebody has to say, and it has to be something that everybody accepts, is some sort of a standard for, I don't know, you care about income, you care about the tax, or there's certain markers that have to be the things you agree you want to verify against. And what people don't appreciate about blockchains is it's sort of a kind of collective agreement that here are going to be sort of primitives around compute and data. If you have that in combination with these scalable ways of proving lots of things, because think of it, I mean, if we want to have CNN, if CNN says all of a sudden, if a verifiable network, a verification network and a blockchain exists, then maybe someone puts out, some kind of I don't know, it's like a chain link thing that publishes images to the thing and they're verified. Or maybe somebody puts out a kind of a piece of application, a smart contract that takes images and puts them together in a way to get you, a newsreel. All of those things, all of a sudden, you could have that, or a voting application. Everybody signs up for a smart wallet and votes on the network. These things will happen in an environment where all of a sudden the ability to say, I want to verify that, I don't know, this person sort of showed their identity, this person only voted once. Those things can actually happen in a very, kind of innovation is kind of democratized. That's why I think it is a little bit of this kind of scalable proving network in combination of what blockchains were really designed to do. In terms of, they're driving kind of a popular agreement on a way to have a standard sort of, segmentation of computing primitives and data primitives. And I think once you have that base platform, again, the kind of thing, it's like, think about the things people do with the internet today. I mean, I don't think we conceptualized all of them when the internet first got built. So I think it's a bit like that.
Definitely true.
Shortcuts you can make. So instead of paying the cost of like having an enormous computation, right? So like some of these trainings, right? They're like, whatever cost billions of dollars, right? And you could imagine that would be even more expensive if you have to pay a factor of a million to prove that this is done correctly. And indeed you can, and there's all like various kind of tricks you can apply. So there's all like special purpose operations. So something that often is used in machine learning is, for instance, matrix multiplication. And there are specific techniques you can use to verify very quickly whether matrix multiplication is correct rather than redoing a matrix multiplication. So indeed, and in our ZKVM, we're sort of like building in what we call pre-compiled, that's sort of like special purpose operations you can check, right? So matrix multiplication would be one example where it would not make so much sense to go through the entire computation with the ZKVM running on what is a CPU, essentially, that we're executing. It would be better if you can take this kind of shortcut. And for some types of computation, there are these kind of shortcuts we can explore. Yeah.
I think a good example is sorting, right? If you want to sort a list, like the naive way to verify that the list is sorted is you just resort it, right? But that takes n log n time. Whereas if you're just trying to prove that a list is sorted, all I have to do is prove to you that every element is bigger than the previous element, and that takes linear time. So there are cases, this is what Jens was getting at, there are some computations that are easier to verify than they are to compute. And absolutely, that you guys are like taking advantage of that all day long.
Exactly.
Yeah.
They call it the non-deterministic verification. And I'll just add to that verifiable AI training is an interesting field, but we've seen a lot more interest from industry into verifiable AI evaluation, so model evaluation, right? Which is very fast and cheap to do, right? The AI model is already trained. So how do you prove that you have evaluated given ML model correctly with some private data? And that's significantly easier, right? And
Yeah. The code word for that is a field called, it's a whole area now, it's called ZKML. Yeah, so if you search for ZKML,
Yeah.
you'll find a million papers on this topic. It's a very, very interesting area.
ZKML.
So what should we do? Should we stop or should we take one more question?
One more question to 5:25. One more, yeah.
Okay, let's take one more. Okay.
Well, it's all about security, right? Proof of stake has crypto economic security. So if you're comfortable with trusting that 20 people, are not going to collude together, maybe you're fine. And that suffices for a lot of use cases. But if you want mathematical guarantees, right, and produce a proof that will transcend and will still be useful for centuries to come, only mathematics can do that, right?
If I can add to that, right? So there's also, again, this question of like, does the verification compose, right?
Yeah.
So if you want to have like, that there was a group of people that said this is true, right? And there was a group of people that said this is true, and they had some economic senses. And then you want to reason about like the combination of those and so forth, right? It's not clear that the economic security incentives actually compose and give you like verifiability that you can build on. Whereas if you use zero knowledge proofs, then you get verifiability that other people can build on.
Yeah, composability, modularity, the ability for you to create a proof and I to create a proof, and then for us to combine our proofs together.
Cool. All right.